Good day, everyone. This is your European Open briefing for Thursday, July 28th. My name is Michael Florentiades. I am the Chief Economist here at XM.com, and these are the key points you should know about today. The Fed delivered its statement. Big news of yesterday was the Fed meeting and the statement, more or less as expected, but if anything, it was on the dovish side of expectation. So, this led to a dollar drop. Yields were down a little, gold was up, and risk assets were more or less stable. The yen strengthened on stimulus questions, while the Bank of Japan is seen as pressured to act tomorrow. So a big day tomorrow for the Bank of Japan and the yen. On the calendar we had UK house prices, German unemployment, Eurozone consumer and business confidence surveys, German preliminary inflation and US jobless claims. On to the Fed, 2-year yields were down 3 to 4 basis points, so this shows that the markets are expecting a slightly lower trajectory of US interest rates over the coming 2 years compared to the pre-Fed levels. The Fed was a touch more hawkish, but not enough to convince markets of a realistic prospect of a September rate hike. The FOMC said downside risks had diminished, but inflation expectations were constant, and I remind you that inflation is lower than the Fed's target right now. Focus now is on December, as November is off the cards because of the US presidential elections. And I think overall this is consistent with the dovish, cautious Fed is set to deliver one rate hike this year, if that, assuming that everything goes smoothly, of course. If there are more turbulence or some unexpected negative news, no rate hikes this year probably. Now, the dollar was off against all other majors. Euro-dollar crossed above 111, the dollar yen fell to as low as below 104.6, sterling cable crossed above 132, the Aussie reached 75.4 cents. So we are talking about a sizable sell-off in the dollar, which was strong lately. The Fed didn't really give dollar bulls a lot of hope with respect to rate hikes and stressed its gradual, one could say slow approach to higher rates. So I think it's a little bit like the movie Groundhog Day. The dollar bulls got excited on strong US economic data, but the Fed remains dovish as it clings to the low inflation and the global uncertainties and the possibility of global uncertainties, despite the fact that it sounded a little more positive, but not positive enough to promise a rate hike. We'll have to watch, of course, the Fed speakers and what they say, but this is the outlook for now. Now, precious metals also staged a strong rally. Gold traded above 1340 and silver crossed above $20. So precious metals are very sensitive to US rate hike expectations, and the fact that they staged a strong rally is an indication of how the market interpreted the Fed statement. On to dollar yen. Another exciting day. We had a big sell-off in dollar yen. Bank of Japan day is almost upon us. Tomorrow we will get the decision. And we had the Japanese economy minister Ishihara. He was seen as pressuring the Bank of Japan to move, because he said he hoped the Bank of Japan would make the appropriate decision. He also said that he realized probably the Bank of Japan realizes that the world is watching. So these are signals that there is some pressure on the Bank of Japan to act. However, there are some reports that the bank is reluctant to spend more ammo right now in case there is a future downturn in the economy. If it acts now and there is a downturn in the Japanese economy in 6 months, in a year's time, then it will have little ammunition left. However, the political situation as well as the threat of a stronger yen may force the Bank of Japan to act despite its reluctance or despite some cautiousness it may have. I think this is a highly unpredictable, and Bank of Japan has proved possibly erratic in the past in its decision. So this is a major risk event. Consensus is that the Bank of Japan is likely to do something, but maybe it's going to miss expectations. But in all honesty, anything could happen from past experience with the Bank of Japan. On to some data that we had earlier today was nationwide house prices in the UK. They were better than expected in July, showing the Brexit effect had not hit or had not hit yet. So we'll have to see what happens in UK house prices. But in July they were standing fairly well, up 0.5% actually, month on month. Later we will have the key Eurozone economic, business and consumer and services sentiment from Eurostat. So this will be looked at quite closely. And later German preliminary inflation. We have Eurozone inflation tomorrow, so some early reading indication on that. And also we have jobless claims, initial jobless claims from the US, a very quiet day from the US today. So tomorrow morning, just keep in mind we have Japanese data. During the Asian session, we have a whole raft of Japanese data as well as the Bank of Japan decision, and it's sure to cause some volatility in the yen. That's all from me today. Thank you very much for watching and have a great day.